We have with us Swiggy Food CEO Rohit Kapoor. Rohit, welcome to PTI Video.
Thank you. Thank you for having me here.
Now, let me begin by asking you, what valuation is the company targeting with the IPO?
I think we have exact valuation will emerge as after the all the subscriptions over, but the issue is priced between 371 and 390, should correspond to roughly about 11 and a half in that range, but it will settle in once we have the exact price in place. Yeah.
So, what factors have led to this pricing?
I think look, this we have two three philosophies. I think those are important to understand. One is that we have been a company which has been blessed since the beginning to get in the funds when we wanted, and more importantly, the investors that we wanted. Secondly, I think if you look at the offer for sale section where a bunch of our investors are selling parts of the stake largely, you will see that most of them have made very, very handsome returns. Some of them, for some of them, it's a fund returner for them. And we are very, very thankful for that. I think we feel blessed that we have been able to, in just a short period of 10 years, come to a situation where that's the case. And the pricing philosophy reflects that. The pricing philosophy reflects our attempt to make sure that even the investors who are coming in new have a good upside. Now, I can't predict that where the stock will land, what the price will be, because that's dependent on the markets. But we feel very comfortable that as a result of interaction between the investors, because ultimately the investors who price the IPO, we don't, because it's the price that they are seeking at some point. The bankers who've been advising us and our own comfort level, we feel we have priced it right, and we're looking forward to the next few days.
But there have been numerous reports of Swiggy lowering its valuation with regards to the IPO.
So if I go back 1 year, see, I think I have read now 25 maybe reports of what Swiggy's value is, right? Now, the real value of a company is when the transaction actually happens. Any other reportage is just reportage. So neither have we ever said from our own side that we want to value at X price, nor have we said Y price. This is all speculation in the media on what the value is. So the fact of the matter is the value has not gone up or down. The value is exactly where it's supposed to be. But IPO are a very public event, and I think people love to speculate on what the price is. I just want to set clearly on record that there have been no lowering of valuation per se. There was a discovery process, and at the end of it, this is a price I think we collectively feel very good about.
Now, in the June quarter, Swiggy had a loss of 611 crore, though it has narrowed. By when do you expect to achieve break even?
So the when again is a future. So I'm not permitted to give you any future forecasts, or neither am a soothsayer. I don't believe in that personally, and anyway, right now I'm not allowed to do so. So I can only talk about the past. And if you look at the past, there are three things which are very clear. One is the food business is profitable and has been profitable consistently for a few quarters, right? Showing a clear trajectory on profitability as well as growth. The diner business is losing very little money. I think its profitability is improved. The Instamart, which is the third one, where we are actually investing a lot right now. I think we believe the growth rates there in the market there is quite attractive, and the capital we have in the balance sheet as well as the capital we're raising from the markets right now will go behind Instamart in a major way. There, I think the unit economics are improving continuously. There is a investment phase going on in the company. So I think whenever you look at like a company like Swiggy, which is a combination of several businesses, and three things I want to point out. One is we believe we are in very, very attractive businesses long term. Second, I think we have a track record of within a very short period of time scaling and making businesses profitable, as is evidenced in the food business. And three, I think you should look at it split and see that the more mature businesses, are they making money or not? Instamart, I think, is just a 3.5, 4-year-old business. So for the maturity vintage of the business, and there have been other players in the market who have existed for 10, 12 years in the form of different companies, and they were acquired later on and renamed into a different company. I don't think it's the right comparison, because we are just a 4-year-old entrant into the space, and I think as numbers suggest, doing remarkably well there.
Do you believe that going forward, revenues from the Instamart business may actually overtake the food business revenues?
It could actually, and the growth rates are very dissimilar. So there are two factors which are quite different. One is the market size of the grocery and the e-commerce market is way larger, right, than the entire food services market. So the TAM itself, what they call total addressable market, is larger. Second, the growth rates are different, right? So the Q-commerce, as we call it, is growing at a very different pace. Food is growing very well at a different pace. If I have to just tell you how we feel about it, think of it as having three children, right? One is 20, one is 16, and one is 8. Is a 20-year-old young and has a lot of potential in the future? Absolutely, yes. But the 8-year has even more, because there's 12 years to get to 20. And I think we feel blessed, because the way I see it is probably food is a 20-year-old and dine out is 16-year-old and Instamart is 8-year-old. So do we have any middle-aged businesses in our portfolio? Answer is no. Do we have kids at different stages in life and with different potential? Answer is yes. That's how I feel about it.
But considering the intense growth that the quick commerce space is witnessing, are you looking at acquisitions in that space, or are you looking at scaling up Instamart to actually give competition to rivals like Blinkit and Zepto?
I personally think that we as a company are not very acquisitive in nature. So if you look at from an investor should note that over a lifetime, the dilution which actually affects the investor valuation, which has happened in Swiggy, is less than 2%, right? So we are not averse to acquisition, but it has to make immense sense for us. And it cannot be only for the purposes of adding revenue. It has to bring certain competencies and benefits. Right now, I think we feel very well positioned. We have the business, we have the technology, we have the people. So unless and until there's something very, very, very exciting which comes along the way, the likely scenario for Instamart is going to be more organic growth and investments going there.
Now, you're looking to raise about 11,300 crores through the IPO. Could you give us an overview of how you plan to utilize these funds?
Yeah, so it's there in the DRHP in great detail, but just in terms of broad sense, I think the broad sense is that given that food is profitable, dine out does not need that much capital. It's near profitability. Most of the money will go into two or three areas. One is definitely expanding and doubling down on the quick commerce business, which is showing great potential. Second is in branding marketing, because for us as a company, I think that's a very important aspect. We are a very consumer driven company, so a lot of investments go in there. And third is for other purposes, like we have no specific plans of an acquisition right now, but I think it can't be ruled out if some attractive assets come our way and it makes sense for us.
So, is the company looking to grow organically, or are you also looking at inorganic growth through acquisitions?
I think this watches business is a bit overstated, honestly. I don't, if you look at India, many companies have raised like humongous amounts of capital and failed miserably, right? And many companies have had it pretty tight. They have raised it at the right time, they've kept it tight, and they have done beautifully. So I think having a watchist in India is only meaningful up to a point, because guess what? At organically, I think our attempt will be not to spend that money and improve the economics of all businesses. Now, from an acquisition standpoint, if something, it's not the primary purpose of this fundraise at all, and I just want to make it very clear. And neither is everything needed to be on the balance sheet, because if there is an acquisition which comes along the way, there are ways to fund acquisitions which are pretty much standard and proven globally, not just in India. So I think we should take this whole watches business with a pinch of salt, and I don't think the winners of the future are going to be decided by how much they have in the balance sheet. They are going to be decided on how much they care about their consumers, how passionate they are about consumer experience, what kind of teams they build, do they have the ability to attract high quality management, keep them there in the company, and third, I think just the sheer execution which is needed to build companies of this nature and scale. So again, I think we score very well on the dimensions that I spoke about. Having a strong balance sheet is an advantage, and we are happy for it.
We've seen a steady increase in platform fees since it was first introduced by Swiggy. Going forward, do you see this trend continuing, because it does increase the price of online ordering?
Right.
But are you seeing this as a way to increase your profitability to bring in more revenue?
I think this is something which needs to be understood in balance. So before I come to platform fee, let me also give you some indication. So for example, if you look at Swiggy One, which offers you free delivery, it's pretty attractively priced, and we are the only player which actually, if you buy Swiggy One, you have three benefits. One, you have free delivery on food, you have free delivery on quick commerce, and you have get extra benefits on the Swiggy Dine Out. No other program in the market has benefits of this nature. And the percentage of free deliveries over time has increased a lot, right? So the actually food delivery is becoming cheaper for the consumer overall. If you see that now in terms of platform fee, if you book a ticket today, train ticket, which is on a platform, you pay a platform fee. If you book cinema tickets, you pay a pretty decent amount of convenience fee. If you book a flight, you're paying like a decent amount of fee. So there's no other service you use today which you don't pay, right? Second point is actually food has been a laggard. Food delivery, honestly, is a 10-year old category, has been a laggard in the space of actually putting some fee on the consumers to transact with us. And I think it's pretty legitimate. However, also, are consumers only value conscious in India? That answer is absolutely no. I think there is clear recognition. The consumer does not want to pay for service they don't believe is good, right? But when the service is good, the convenience is high, the willingness, the ability, and the generosity of the consumer, I don't undermine. And whether it goes higher or lower, I don't know. But is it something which is I feel very comfortable charging given the service that is being delivered? Answer is yes.
Finally, if you could share details of the IPO for our viewers.
No, so the anchor book is today, which is we are sitting on June 5th. So anchor book is today. 6th, 7th, 8th is the where the retail and HNI segments open up for subscription. 13th is listing. I think 4 or 5 salient points for the IPO. One, a company which is by Kantar rated as the best consumer tech brand in India. We take, I think it's a privileged position. We take immense pride in that. Second, I think strong management team. I think if you look at the whole number of people and the kind of people who lead this company, it's not just Harsha as a founder and the co-founders, but also backed by a very strong management team. Third is board governed. The board is stellar. So I think we are very careful about governance and how we focus there, because frankly numbers go up and down, markets go up and down, but the quality of the company governance matters in today's times a lot. We are in beautiful, exciting businesses. As I said, that you're investing in 3 youngsters, 20, 16 and 8 is how I see it. No middle-aged portfolio here. With huge potential for growth and spending the rest of their lives doing exciting things. We're blessed to be in those sectors. And lastly, I think there's a very, very strong trajectory of improvement in profitability across businesses with scale. And I think that's always a very powerful combination to look at when you're looking for stocks to own. And I do believe that we want to be one of the stocks which is not just treated as a trading stock, but is often left as the heirloom for the next generation.
Rohit, thank you so much for speaking to us. Pleasure having you.
Thank you so much.